Bitcoin holds strong after $9 billion whale sale as Ethereum speculation surges and open interest nears 40%. Bitcoin continues to show resilience as July winds down, shaking off a massive $9 billion sale by an early OG whale. At the same time, Ethereum is experiencing a surge in institutional and speculative demand, with ETF inflows doubling in just 6 weeks and open interest dominance approaching multi-year highs, according to data from K33 and Glassnode. Bitcoin withstands Satoshi-era whale sale. Despite an over-the-counter transaction involving 80,000 BTC on July 25, facilitated by Galaxy Digital and traced back to a 2011-era wallet, Bitcoin swiftly recovered. The sale briefly drove BTC from $119,500 down to $114,500, but it rebounded above $118,000 soon after. According to K33 head of research Vettel Lund, the price stability reflects robust institutional appetite. Treasury companies and Bitcoin-linked ETFs accumulated 115,165 BTC throughout July. Even after accounting for the Galaxy sale, net inflows stood at 35,165 BTC, a substantial absorption of sell pressure. Institutional demand continues to outpace even significant whale-level supply, Lund noted. Meanwhile, the derivatives market has seen a significant uptick in leverage. Open interest in perpetual futures crossed 300,000 BTC, a level last seen in late 2024. However, funding rates remain neutral, possibly due to hedging strategies by OTC desks managing directional exposure. Lund cautioned that elevated open interest raises the risk of liquidation cascades should volatility spike. Ethereum sees explosive institutional rotation. While Bitcoin consolidates, Ethereum is attracting growing speculative and institutional capital. Since mid-June, ETH ETFs have added over 1.6 million ETH, more than double the combined inflows from the prior 11 months since launch. The surge has powered a 52% monthly gain in ETH and pushed the ETH/BTC ratio from 0.023 to 0.032, its highest since January. Ethereum inflows have accelerated dramatically, pointing to a meaningful capital rotation, Lund explained. July ETF inflows reached $5.1 billion for Ethereum, nearly matching Bitcoin's $5.7 billion, despite ETH's market cap being less than 20% of BTC's. Futures activity confirms the trend. CME open interest from non-leveraged institutional players increased by 527,000 ETH in July, indicating a shift from hedging to directional long positioning. Glassnode data further highlights Ethereum's rising prominence in derivatives markets. Perpetual open interest dominance for ETH now stands at nearly 40%, its highest since April 2023, a level surpassed on only 5% of days historically. This suggests a notable shift in speculative momentum away from BTC toward ETH. Volatility ahead as macro catalysts line up. Analysts expect increased volatility in the coming days, driven by a series of key macro and regulatory events. These include the anticipated White House crypto policy report, former President Trump's August 1 tariff deadline, the Federal Reserve's FOMC meeting on Wednesday, and critical U.S. employment data later this week. With Bitcoin demonstrating strength despite large-scale sell-offs and Ethereum showing explosive growth in institutional participation, the crypto market appears primed for a dynamic start to August.